What's coming next could be the most aggressive Ethereum supply shock in history, and it's already underway. In just the last 6 weeks, between late June and today, 6 Wall Street investment vehicles have ripped 2.4 million Ethereum out of circulation. They're also sitting on another $27 billion in buying power, which is enough to drain 40% of all the ETH still left on exchanges. Now, with that in mind, think about what we've seen in the past. The rallies of 2017 and 2021 were just fireworks, loud, blinding, and over before you could even catch your breath. But this time, we're not looking at fireworks. This is a drain, a steady, unstoppable removal of supply from the market. And drains have a habit of making tops inevitable. So hold that thought, because the real question we need to answer is where exactly this flood of capital is coming from and who's controlling the tap. First, to uncover where this flood of capital is coming from, we need to talk about digital asset treasuries, or DATs. These are publicly traded companies designed to raise cash from stock market investors and then use that cash, that capital, to buy and hold Ethereum. Names like BMNR, SBET, and ATNF are at the center of this. The scale of their activity is staggering too. There is already $27 billion queued up to buy ETH. And BMNR, also known as BitMiner, has increased its purchasing allowance from just $2.5 billion to over $20 billion, and all in the span of only 6 weeks. These DATs have acquired 2.4 million Ethereum. Billionaire Peter Thiel holds stake in BMNR as well as in ATNF's Ethereum's vehicle called ETHZilla. And the Wall Street research and trading firm Fundstrat is executing these purchases with surgical precision. The process is simple but powerful at the same time. These companies issue shares, they raise cash, they buy Ethereum with this cash, and then they lock it away in their treasuries. Their market net asset value, or the MNAV, acts as the accelerant. The higher it trades relative to their actual holdings, the more investor appetite they get, which allows them in turn to raise and deploy capital even faster. And absorbing ETH is only the first move. The second move will change how decentralized finance, or DeFi, operates for the next decade. So while DATs are draining supply through the equity markets, spot ETH exchange-traded funds are doing the same in traditional investment accounts. These ETFs directly hold Ethereum, and they've been breaking records. On a single day, $1.02 billion flowed into Ethereum's ETFs. To put this into perspective, that is half of all the ETH issued since Ethereum's merge upgrade, all in just one season. Corporate treasuries are getting in on the action as well. NASDAQ-listed companies like BTCS, Chainlink Gaming, and BitMiner itself are holding ETH as part of their reserves. And when you zoom out, the market is splitting into two poles. On the one side, there's Ethereum and its rollups, which basically are just scaling layers that inherited Ethereum's security and offer essentially infinite censorship resistance. And on the other side, there are fully permissioned corporate layer 1 blockchains like Stripe, Circle, and Tether, which are built for regulated payments and settlements. And as for the blockchains that sit in between, the somewhat decentralized projects, they're getting squeezed down towards zero relevance. And here is where the picture gets even more powerful. The ETH being accumulated is not just sitting idle. Aave, one of the largest crypto lending protocols, now has over $25 billion in active borrows. That actually places it among the top 40 US banks by that measure. Their own stablecoin, GHO, has grown to 345 million in supply. And Lido, the largest liquid staking protocol, has become profitable for the first time. And that's before the expected surge from a staking ETF narrative even begins. And over on Aerodome Phi and Base, trading volumes are climbing rapidly as Coinbase quietly rolls out decentralized exchange access to its more than 100 million users. So far, they've only reached about 1% of that user base, meaning the potential runway is enormous. And if we look ahead, projections actually suggest that between $20 and $40 billion worth of ETH could flow on-chain borrow markets this year. That would be the largest active capital injection in the history of all of DeFi. And that kind of capital demands rails, standards, and trust, which bring us to the next player. This is where Chainlink steps in. They've been building their position for over a decade, and now they control critical layers of blockchain infrastructure. They provide the data feeds that DeFi relies on: cross-chain interoperability, automated compliance systems, privacy solutions, and the integration with legacy finance systems. And one of the most important developments is in ERC 3643, which is the SEC-friendly standard for tokenizing real-world assets. This standard comes with Chainlink's compliance engine built in, meaning every compliant tokenized asset touches Chainlink systems. Partnerships with the Intercontinental Exchange, abbreviated ICE, Chinte, and the Truth Network shows that Chainlink's influence extends far beyond the crypto-native world. And here's the back tie. The ETH being bought today will ultimately transact over rails that Chainlink already controls. As more blockchains come online, more Chainlink deployments will follow, leading to more revenue and more buybacks of their Link token. Quite beautiful, huh? There's another dynamic worth watching closely as well. That is, Bitcoin dominance is starting to crack. Historically, that's been the starter pistol for alt season. And in past cycles, ETH's strength has often spilled over into assets like Solana and Solana's own SPL tokens such as Bonk. From there, the rotation often moves into meme-driven tokens like Doge or Pepe and Honk. And right now, according to the Doge pattern, we're sitting between the orange and the green phases. And historically, this is when the big moves tend to start. So how do we position ourselves for this? It starts with a core holding of ETH, alongside select DAT equities such as BMNR, SBET, and ATNF. And on the infrastructure side, exposure to Link, Aave, and Lido gives you stake in the railways, okay? The infrastructure powering the ecosystem in the future. And when Bitcoin dominance dips, as we're seeing right now, that's the time to rotate into Solana and the other top performing tokens. Now, I'm not allowed to give financial advice. So when I say all of this, I'm not telling you go do it. I'm saying this is what makes sense to me. And this is the pattern that I have seen, and many in the space that have gone even before me have seen and know is typically the pattern and how it works in the market. Actually, anyone who tries to time the top of the market usually fails and ends up round tripping their investment back down to where they entered. So I don't recommend that. Something I do personally, once again, is I simply take profits along the way of the pump. 5, 10, 15%, 5, 10, 15%. So anyway, now as we wrap up today's video, let's take a step back and look at the whole picture we've just walked through today. In the last 6 weeks, we've seen 2.4 million Ethereum vanish from circulation, and we've seen $27 billion still are locked in, ready to strike. And when you connect all these dots, okay, the DATs, the ETFs, the DeFi flywheel, the infrastructure rails, it all points to the same conclusion. It points to the conclusion that in a few months, this will be the paragraph in the history books where the tide turned. Right now, the tap is open, the drain is running, and the market is shifting. So your choice is very simple. You're either early, you're positioned, you're ready, or you think it's just never going to arrive, or you don't take this seriously, and then you lose out. Because by the time you see it all over X and you see it all over social media, that's basically a sign that we're near the top, okay? And at that point, you're lucky if you enter in during a little correction, but I wouldn't gamble with it. Now is the time to be ready. If you're here, you're early. So that's it for today's video. I love you guys very much. Please share this video with a friend or family member that needs to know what's going on. That said, I'll catch you guys in my video tomorrow. Take care.